Okay, now the class is being recorded. Now, according to our schedule, the main reason for the class is on order blocks and how you can trade them, right? So let me go over.
Yeah.
Let me still give you what we are gonna discuss in this live, right? Let me give you the outline. So this is what we are gonna discuss. The first thing under this our schedule is the SMC entry and exit point, right? Then we're
Okay.
gonna talk about order block, breaker block
Yeah.
in the market, right? Now, what's an order block? Like I said, we're not gonna waste time. Let's just complete it. Now, another block is a level where those institutional traders started stepping into the market, right? Now, let's say the price is going up. Now, the price is going to retrace. People are going to buy into the market. Institutional traders are going to buy. And if they buy, the price is going to pull up. So that point where they started buying is where we call order block. Sometimes they're going to call it demand, right? But the order block is where it started from. Order block is the last opposite candle, but demand now is that level. That full order block level is called
Yeah.
demand. But the order block is the last opposite candle before the price started buying. The same thing with selling. If the price is going down, right, it's going to form an order block right there. The last opposite candle before the price started going down
Yeah.
is the order block. But the full region where the price got to and started going down is the supply. Did you understand that? Did you understand that?
Yes.
So that's how simple it is, right? Okay, I'm trying to invite
Yes,
other
I do.
members.
Yes.
Yeah, I guess so. I'm trying to invite other members. I don't know why they're not joining. Okay, now I believe you now know what another block is now. Then a breaker block is this. On a normal scenario, you are expecting the price to
Yes.
come up, then go down. But if the price now comes up, break above that very order block, that order block now is now a breaker block. Did you get that? Meaning the price is gonna come, tap on the order block,
Yes.
and then go up. That's what you are now expecting. It's not gonna tap on the breaker block, no longer an order block because it has already failed, right? So let's go back to the chart
That
now,
block. Yeah.
identify them,
Yeah.
right? Now these are the rules to trade with this. These are what's gonna make an order block valid. I only have two things that's gonna make an order block valid. The first one is the BOS, right? If you don't have a BOS, forming from the order block is not valid. Now, what do I mean? Now, if you notice, I mark out this level as my order block, this box. We do use this rectangle box as my order block. Then, if you notice,
Yeah.
this area went up now to break above this previous high. So now
Yeah.
that's what we call a break of structure. This break above this previous high is a break of structure. So meaning if this order block now, this is where the order block, this is where the price started moving. If the price move up now, got to this point and start reversing, I won't consider this point as an order block because it has not gone up to break above this previous high. Did you get that?
Yeah. Yes.
If it did not break above this high now, it's not a valid order block. Same thing. If it did not break below the previous low, it's not a valid order block, right? So that's the first thing that makes an
Yeah.
order block valid. These are how I trade it, right? Now, the second thing is an inducement or a liquidity level. You know what inducement is?
Yes.
All right, you should remember that, right? Inducement is also how they get the liquidity. Some people they call it liquidity, some people they call it inducement. right? It's just the same thing. Inducement is how they get the liquidity.
Yes.
Liquidity is just money. So inducement is how they get the money. Believe you understand that.
Yes.
So that's how it is. Now, these are the two things I consider before taking trade from the order block level. Meaning, no inducement, no trade. No break of structure, no trade.
Okay.
Right? Now, this is how I go about it. These are the different inducements on the price. Inducement is just a trap. A trap that those institutional traders are going to create in order for you to start trading from those regions. Right? Now, if the price pulls up to this point to break structure and then retrace a little, then go up again. Automatically, people are going to start thinking this area is an order block,
Mhm.
right? They want to start longing from this very area. They want to long because they feel that area is the order block. But clearly, this is your order block right here. This first part of inducement now is what we call an incomplete pullback. This pullback is supposed to tap on the order block before going up, but it did not tap on it. It got to a random air and started going up. So it's an incomplete pullback. People are going to think it's an order block and they're going to start trading. They're going to start longing from this point. And once they long from here now, if they hit stop loss, they have not provided liquidity into the market for the order block to hold. If they trade like this, they want to long from this point, they hit stop loss. Let's say the trade came down, pull up a little, then hit that stop loss. It will not provide liquidity into the market in order for this order block to hold. Did you get it? Meaning
Yes, I do.
that there is now liquidity into the market. So those big banks that want to buy from the order block region, they can now buy. But if there's no inducement, if it gets here, they won't, if they click on buy, it's not gonna go through. It's not gonna go through, it won't work because no inducement to give them liquidity. So what are they gonna do? They're gonna make this your order block the inducement. They're gonna pull up a little, then sell off to hit your stop loss. And once they hit your stop loss, they're gonna start buying off. Meaning you don't have an inducement, you are the inducement. Did you get it?
Yes.
So that's simply how it is. Right? Now, let's go over to the chart. That's the first type of inducement, the incomplete pullback. Then the second type of this inducement, the same thing with taking short. If you're taking long or taking short, it's the same thing, just the opposite. Now, the second part of this inducement is this. As the price is going up, it's going to start forming this low. It's going to form a low like this type of low. Are you seeing it?
Yes.
This type of low now that is going to form before going up to break the structure is the inducement. It's an inducement for the price or for the market, right? Now, you're going to start asking, but there's another block right here, but this other block was what led to the break. This other block was what pushed the price up that broke the structure. So you said another block should break structure, and clearly this other block to mark out, this other block or this area you mark out as an inducement was what broke the structure. Because I said the other block should break structure. This other block now was what break the structure. Now, why am I calling it an inducement? Now, if you're going to trade from this other block because it broke structure, you should have what? You should have an inducement at this top right here. Did you get that?
Yes.
You don't have the inducement, even if it's this other block that broke this structure, is not valid. It's going to act as an inducement to make this one valid. Did you get that?
Yes.
Simple and easy. That's how it is. Right? So
Okay.
let's go back to the chart. Let's start doing some examples. Now, we're asking how to take trade from this other block point, other block regions, right? I'm going to teach it to you. Now, let me show you different ways to mark out other block, right? Before I start showing you how to trade with it. Is it clear?
Uh,
Now, the first way to mark out other block is this. Mainly, my other block, the other block I do mark out on my chart is mainly 1 hour time frame order block. right? 1 hour time frame order block is the order block I do mark.
Sorry, I have one question. Sorry.
Okay.
Yeah, marking out your order block and your breakout structure and all that. So we need to mark it on 1 hour time frame after checking the market direction on 4 hours time frame.
Very correct. I was gonna get on
And
with it.
when we mark
Okay,
and when
continue.
we mark out all this, when we mark out our order block and our BOS, then we don't have to go to the 15-minute time frame anymore. We just need to take our trade from the 1 hour time frame, right?
Yeah. Now, are you listening to me?
Yes.
You can also go to a 15 minutes time frame if you don't get all the confirmation you need, or if you want to get a sniper entry. Are you getting it?
Come again. Come again.
You can still go to a 15 minutes time frame if you didn't get all the confirmation. Like on a 1 hour time frame now, you don't spot any
Yeah.
inducement level. You can go down to a 15 minutes time frame to get the inducement. Did you understand that?
Okay.
Then some people, or me personally, I do mark out order block on a 1 hour time frame. But if you want to get a sniper entry, you know, you mark out, let's say you mark out this area now as you want to take trade from here. If you want the price to just come tap into your trade and start moving immediately with a sniper entry, you go down to a 15 minutes time frame to mark out your order block. Is it clear?
Yes.
Now, the disadvantage of me not doing that, why I don't do that is this. Most of the time, the price can just respect the 1 hour time frame order block without coming down to respect that 15-minute time frame order block. So
Okay.
that's the reason I'm going to show you some examples now so you can really see what I'm saying. It can just respect the 1 hour time frame OB. That's even coming down to get your 15 minutes time frame OB. Did you get that now?
Yes.
Okay. Now, this is how you mark out order block. Any last opposite candle on the price is an order block. But what's going to make it valid? BOS inducement. Are you following?
Yes.
So now, if you're on the price, if you're on the chart, now you're going to notice this is the last red green candle before the price started selling off. Can you see it right here?
Yes.
Now, what did I call this? An order block. Now, if you notice
Order
what I
block.
did, I marked out the full green candle before the price started selling off. Are you seeing it?
Yes.
I marked out the full green candle before the price started selling off as my order block. But in a scenario where it's like this, take a look at this, where the price will start sending out all of this rejection, this tiny, tiny weak rejection at this bottom. Can you see them?
Yeah.
This tiny, tiny
Yes.
weak rejection now, you mark them all out as the order block, like this. This is what I did.
Yes.
At least there should be three, but this is not up to three. This is just two. So I decided to use it to show it to you. At least there should be three of this tiny, tiny weak projection. Did you get that?
Yes.
Okay. Now that's how you mark out order block. Then the third and the last way to mark out order block is this. If you have a chart, I'm trying to find an example so I can easily show you. If you have a chart like this, take a look at it. Take a look at it. Can you see my screen? Okay.
Yes, I can see.
If you have a chart like this, the price is going up, right? And in a normal scenario, this is the last red candle before the price started buying. Are you following?
Yeah.
This is the last red candle. Sometimes you can use this other last red. Are you following?
Yeah.
But in a case scenario where there's a long week like this, just 1 week, and the week went below every single low on the price, or if it's a bearish move, it's gonna go above every single point of the price. Are you following?
Yeah.
Like this very long week now, even if it's a green candle, it's not out this long week. That very week is what you mark out as the order block, the full week. Did you see that?
Yeah.
Where you mark out as the order block. Can you see that?
Yes.
All right. So let's go over and let's start taking trade. Okay. Now, this was the first order block we mark out. remember that first is the direction of the market, right? This is how you take trade with this. Let's start taking trade with this very strategy, right? The first thing to do is to head on to a higher time frame, mainly 4 hour time frame. Now, on the 4 hour time frame now, I want to know what direction is this market heading? So 4 hour time frame to know the market structure. Remember, market structure is what we know on the 4 hour time frame.
Yeah.
So market structure is just the direction of the market. And we only have two types of market structure, the bullish, bearish, we only have two types of market structure, the bullish and the bearish market structure. It's only the market trend that we have the consolidating market, the bullish market trend, bearish market trend, and the consolidating market. But in this market structure, we only have one. We only have two. Did you get it?
Yeah.
Now, on a one, once you mark out your market structure on a 4 hour time frame, you now go down to a 1 hour time frame now to mark out your OB, BB, then BOS, then inducement. Do you know what all of those things mean?
Yes.
BOS, break of structure. If I say OB, order block, BB, breaker block, then liquidity slash inducement. Now, let's start taking trade with this. First, now, I want to go down to I'm seeing a BB breaker block. Yeah, you are correct. Now, on a 4 hour time frame, take a look at this now, and then let me see if you guys are actually getting it. Take a look at this and tell me the direction of this market currently. Recently now, what direction is this market heading recently?
It's bullish.
Very correct. The market is bullish, right? So just a
Yeah.
minute. Hello, can you guys hear me?
Yes.
Okay, I'm so sorry for the break. So let's continue. Now, like you guys replied, market structure is bullish. Now, if I'm shorting, I'm wrong. Now, if I'm shorting, I'm wrong because market structure is bullish, right? Now, take a look at what I showed you guys earlier. Take a look at what I showed you guys earlier. I told you guys, if there's a tiny wick rejection like this, the wick rejection just shooting up, going above every single other candle, right? That wick rejection is the order block. I believe I said that. Then I said, if there are tiny wicks, like tiny wicks, and there are many, those many tiny wicks are the order block. Now, if you notice, the price literally respected this order block. I'm just trying to show you guys this. Did you see what the price did? The price literally just tapped on it and started selling off. If you start marking out this last green candle now, you might not get a sniper entry. The price will run in loss before it will start moving in profit. Did you understand that now? Did you understand that?
Yeah.
So that's how it is. Now, I'm just trying to put that in so you guys can get it. Now,
Yes.
market structure is bullish. I want to long. Now, if you notice, I've already marked out this level, this first level now as my BOS. So I can easily start marking out my BOS on a 4 hour time frame because BOS is also a way you know the market structure. I believe you all know that. BOS is a way you know the market structure. Then the next thing is to go down to a 1 hour time frame. Now, the 1 hour time frame now, what am I going to start marking out? My order blocks. Now, if you notice, the market share is bullish and it formed this last red candle before the price started buying. So this red candle right here now is the order block. My order block is right there. I want to long from this order block point. Can you see that? Now, if you notice, the price has not broken above this previous high, but already indicated it, already marked it out as a break of structure. But the price has not broken above it. Why? Because I know that the price is going to likely break it. And once it breaks it, it is a break of structure. So that's why I already named it the BOS. Now, let's see. Now, the price has just broken it. Not all break are valid. If it's a tiny weak rejection that broke it, tiny weak rejection is not valid. If it's just a tiny wick that broke above it, it's a liquidity sweep and is not valid. Right? Make sure you are getting everything. Now, the price has just broken above it. That's formed a break of structure. So I'm now waiting for it to form an incomplete pullback, which is gonna be something like this. Now, if you notice, it had these 3 equal lows at this bottom. These 3 or 4 equal lows now is a liquidity for me. It's like a support. Do you know why it's a liquidity for me? It's like a support to traders. Traders, they're gonna, those support and resistance traders, they're gonna mark it out as a support level. And they want to long from there, they want to target the next high. Are you following? Are you guys
Yeah.
following? So that's why I'm gonna mark it out as a liquidity, because it has already formed. If you know, if you've traded before, if you've traded, you have experience in trading, you know that double bottom, double top is a very popular strategy for traders. So many traders, they trade double bottom and double top. So if they see this now, they feel it's a double bottom and they want to buy. Right? Now take a look at what the price did. The price went up, it's coming down to the double bottom level. So let's see how it's gonna react. If you notice, the price has just formed this, it's gonna break it, obviously, because it's gonna likely come down. People are gonna likely buy from here. Right? So let's just indicate it so you guys can start seeing what I'm saying. Let me indicate it. Let me use my support level 2 to indicate it. So this is going to act like a liquidity for me. Now, if you notice with what I said if there are multiple weak rejection now, if there are multiple weak rejection, those weak rejection can also be marked out as an order block. If you notice, we have about 3 weak rejection at this bottom. So these rejections now can be indicated as an order block. Can you see that? Can you see that? Always reply. Can you see it? Are you guys following? Just reply so I'll continue. Unmute your mic and reply.
Yes.
Okay. Now, this area can be an order block for me, but what do I want to see? A break of structure. This is the nearest high. Did the price broke above this previous nearest high? No, the price did not break above it. So likely, there's no break of structure. So this is now invalid. Did you get that? Now, I want to see how the price is going to react to that level.
Please, can you repeat that again?
Okay, there is so many rejections right here. And I said, if there are multiple rejections like this, there is an order block right there. That's an order block. Right? So people are going to call it demand. If there are multiple rejections like this, you can mark it out as an order block. But if you notice, if you mark it out as an order block like this, it was at this point, the price will not go and break above it. Are you guys following? Are you following? Just always unmute your mic and reply. So I'll continue.
Yes.
Okay.
Yes.
Now, the price will not go and break above that previous high. So clearly, there is no break of structure on this very order block or for this very order block, but there's an inducement. If you notice, the price had the pullback right here, then rapidly push up. So there's an inducement right there, but no break of structure. So likely, I'm not going to take a trade from this order block zone, right? Because no break of structure is active right there. And I have my order block at this bottom. So literally, you already know that this order block now is the inducement to this main order block because it's the incomplete pullback or the first pullback after the break of structure. So it's an inducement for this order block. So you're likely not going to trade from this very order block. So let's see how the price is going to react. So if the price is going up, buying up again, if it keeps breaking structure, you mark out your order block again. Now, take a look at what the price did. At this point now, the price went up again and it had this high and broke above the high. My break of structure is active right there. You already saw that. Right, my break of structure is active right there. Then if you notice, there are this weak reaction at this bottom right here. Can you see the weak reaction? This is about up to 4. Like I said, at least 3. If you're going to mark out the weak, at least 3. So this is about 4 and is active right there. So I'll just mark it out. The full weak reaction as my order block. Now, what's the next thing? My inducement. Where's the pullback? If you notice, when I taught about liquidity, right, we have not gone deep into liquidity. It's going to be one of our sections. Now, when I thought about liquidity today, I said, as the price is going up, it's going to start forming order block. People are going to start marking out that level as an order block. But clearly, that's just an inducement for this main order block. So clearly now you now see that you have an inducement right here. You have an inducement. You can use the dollar sign to give it the name. Right? So if you have the inducement now, what are you going to likely do? You're going to likely buy from the order block because you now have everything in place. Did you guys get it? So you buy, your first target now is the nearest high. This is the nearest high. Target 1. Second target is the highest point. Or if you're going to look at the price closely, you can see there's an order block right here. You can say that order block is my first target, depending on how you are able to hold the trade. Because if the price gets to that, I believe you are seeing the order block right here, this green candle. Because if the price gets to this point, it's going to likely sell off. So if you're not strong enough to hold till it gets to full TP, you can just take your partial profit out of the market at this point. Right? So let's see how it's going to play out. Can you see that? Now let's keep taking trades. We have taken this very trade now and we won the trade. Right? Now remember, we still mark out this area as an order block. This is not a clear order block. So literally, if you mark out any order block, the price is always gonna react once it gets there, no matter how long it takes. Right? The price might not get there, but if it gets there, it's gonna likely react. Did you get that? Now, if you notice what we did right here, I mark out this level as an order block because there was a strong sell-off at this point. Then it had the pullback, then started selling off. This incomplete pullback right here, then started selling off. Then it had its break of structure, break below this low. Then what's the next thing I'm going to likely see? I'm going to sell from there. Now, before I sell from there now, market structure has been bullish and is bullish. So if I'm selling, I'm wrong. So now that other block is going to fail. If it fails now, it's now a breaker block. I can likely buy from this point. I'll buy stop loss just below the breaker block. My target is the first high. That's if I wish. If you notice, this is not a good trade. It's just a 1:1.5, 1.25, which is not a good trade. So you can zoom into the price and look for any nearest high. If there's no nearest high, you can just allow the trade. You can just leave the trade. Right? This is now a breaker block for me. If you notice, the price is bulling up again. Let me show you some clear examples of how the price really moves. These are the price moves, right? The price is going to form. Let me just show you a replicant of how the price move. The price is going to form a high, pull down, then as it's going up, it's going to have an order block, right? And once it pulls up now, right, it's going to form an inducement for the order block. Then it's going to pull up to break structure, to break above this previous high. Now, once it breaks that previous high, now once it's done breaking it, it's going to retrace. It's going to break below. People are going to mark out this area now as an order block, right? It's going to break below it. Once it breaks below it, then it's going to now use this area as the main order block, right? And now it's not going to pull up. It can retrace to this breaker block now, which was a failed order block. It's not going to even retrace, right? It's not going to respect it. It's just going to break it out. The main thing I want you to notice is this very order block at this point. There will be an order block right here. This is what I want to put out. Now the price has just broken below this low, breaking below this inducement level now. People are going to start thinking there is a break of structure right here. People are going to start marking out this low, the price breaking below the low, as break of structure. Whereas this is just an inducement to this other block. And once the price tap on this other block now, once the price is going up, people are going to start buying into the price at this point. They're going to start selling into the price at this point. They're going to start selling. And if they are selling now, they are selling at an invalid order block. Because the market structure is bullish, it formed this break of structure, which is just a sweep before this other block. Now people are selling from here because they don't understand this. This is just a replicate of how the markets move. Once people are selling from this point now, the price is going to likely retrace a little, then pull up again to break structure. Once it's done breaking that structure now, you know what that means. It has now created this area now as an inducement. Did you guys get the mechanics of how this works? Did you guys get what I just explained? Just drop it in the chat box if you get what I just explained. Always be active. Drop it in the chat box if you get it, so we'll continue. Always be active, so I'll know. Are you guys following? Reply. Just unmute your mic and reply. Are you following?
Yes.
Okay, someone is saying yes. Always unmute the mic and reply if I ask any question. Now, simple. Now, people are going to start marking out this area now as order block again. Remember, this low formed because the price, people started selling off from this order block, thinking this is an order block, whereas it's just, they are going to think this is a break of structure, which is going to make the order block valid, whereas it's just a fake out, it's just the inducement for this order block. Now people are going to start selling from there, and once they sell, the price is going to likely react to that very sell. Once they sell to this region, it's going to pull up. Now, if you want to trade again now, this area is your order block. You're going to find your order block right there. Then this is now going to act as an incomplete pullback for you to trade, and you're going to mark it out as the inducement for your order block. This is just clear picture of how the market reacts, of how the market moves. So let me show you what I mean. If you notice now, let me scale down to any lower time frame so you guys can see what I'm showing you clearly, right? Notice what I mean. Notice what I said. Notice what I said. We mark out this level. Notice what I just explained now. It's very simple. We mark out this level now as an inducement, right? Then the price was coming down, broke that very level. People are going to consider this as a break of structure. They're going to start identifying it as a break of structure, and which they're going to mark out this level as an order block, right? Now, if they mark out the level as an order block now, they're going to see that, okay, the price literally pulled up to this point and sold off again. So clearly, this order block is now valid because they have their incomplete pullback right there. They have their inducement. So they're going to likely start selling off from that very order block point. But this other block now, or this area they consider as a break of structure now, is just a liquidity sweep for our order block, right? Now, take a look at what they did. Immediately the price got there now, they started selling off. And immediately they sold off, the price rapidly pushed down. Did you see a reaction? The price reacted to their pressure. The price reacted and then pulled up again. Meaning, you now have a pullback right here. You now have an incomplete pullback right here. You now have an inducement right here, right there. Did you see that? You now have the inducement right there because of the force reaction from this order block. Now, you now have an order block, which this relation are up to 3, so I'll just mark them out. I have my order block. Then you can see how this inducement now, or how this reaction has formed or created an inducement for us. So I believe it's getting clear. This is just how it is. This is how the market keeps repeating it every single day. So let's say you long from this other block, breaker block. This is already a bad trade. So I'm likely not going to take the trade. But likely it's going to play out. But me personally, I don't love taking this trade. It's just 1:1 risk to reward ratio, which is literally a bad trade. Can you see the trade hit full take profit? It respected the breaker block, but me personally, I don't like this type of trade. Right? It's a bad trade. It respected the breaker block. Why is it a bad trade? Because it's a 1:1 risk to reward ratio. That's the only thing. It's a good trade because you are trading from a breaker block. The price is going to respect it. But it's a bad trade because the risk to reward ratio is bad. At least 1:2, lowest. But the best is 1:3. Then, if you are good, 1:4. If you are better, 1:5. Start increasing your risk to reward ratio. But 1:1, don't take the trade. It's just rubbish. Right now, you have an inducement level right here, this low. Then you can take a trade from this other block point. Market structure is still very much bullish. If you are selling, you will only catch little pips. You only start catching very little pips in the market. But if you are buying, you will catch more pips because the market structure is bullish. So I'm going to likely buy from this point. So let's see what the price is going to do. Let's see the reaction. Okay, the price did not come to collect my order. Right, the price did not come to collect my order. So we're going to start looking out for where I'm going to long again because the market keeps breaking structure. It's bullish. I'm also start looking out for where I'm going to long again. Clearly, notice this for yourself. Notice this. The price has an order block right here. Then if you notice, the price also has an order block right here. Let me mark it out so you can see what I'm saying. Why is this place an order block? Or what is this order block valid? I don't know. I would have just, let me see. Let me zoom into the price. I want to ask a question. Okay. Now, take a look at what I did. I marked out this order block. Now, I'm going to ask 3 questions at once. 3 questions at once. First, is this order block valid? Did I mark it out correctly? If I mark it out correctly, yes. Is the order block valid? If it's valid, yes. Right? Those are the 2 questions I'm asking now. Did I mark it out? Did I mark out this order block correctly? And secondly, is this order block valid? So drop yes if both are correct. If both are not correct, just drop no. So at least 3 replies so we can continue. Drop it in the chat box so we can continue. Don't waste time. Just drop the Drop the reply in the chat box. The second one is not valid, okay? Another reply. Let me get what you said. This is the first one. I guess this is the first one. Then the second one is not valid. Is that what you said? Is that what you mean, Mr. Samuel? This one is valid, then this second one is not valid. Just drop it to the
The
chat
second one
box.
is not. The second one is not valid.
Is it this very one?
Yes, it's not valid.
Okay, okay. Valid. Someone is saying valid. I need at least 3 reply. I need the last reply so I can show you why it's valid and why it's not valid.
The second one is not valid because there is a retrenchment. There is a breakout block about to destroy it.
All right. All right. All right. Now the answers are complete. Right? Now I've gotten your answers. Now let me answer you in a clear way. In the beginning, when I was teaching this, I showed you guys this. I said for another block to be valid now, it's going to pull up to break structure. Now, if we have a scenario like this, the price formed this low, then pulled up, pulled down, pulled up. You are going to have this other block. You are going to have this other block. Now, you're going to start thinking, hey, where should I long from? Right? Which of these other blocks should I take my trade from? First, this is what you put into consideration. Which of these other block led to the break of structure? That's the first thing. This second order block now was what led to this break. Was what led to this break right there. So this second order block now was what led to the POS. First, now this second order block now is getting a little bit valid, right? It's getting valid. But what did I say? What's going to make it valid? You have a break of structure. Then what's the second thing? Inducement/liquidity. Now, does this second order block now have inducement or have liquidity? Clearly, it was just the only thing it did was just to break structure. It did not have any incomplete pullback. It did not have any near low, any pullback after the break. It just went up to break structure. Clearly, this does not have any liquidity in it. So clearly, this is no longer valid. It broke structure, fine, is supposed to be the valid one, but it did not have an inducement or a liquidity level. Meaning now that it's gonna act, this is now gonna act as an inducement for this to be valid. Did you guys get that? If that this first one has an inducement now, means simply I'll just long from here. I'll just take my buy from this first one. I'll just buy from there. Stop loss without even getting to the second one. Stop loss just like this. Meaning, if it's having something like this, it has this high, then pull back like this before going up. I'm going to just buy once it's back there. Simple. Now, in this chart now, you can see we mark out two other blocks. Clearly, I said this first one is valid because this first one is what pulled up that broke this. We have a structural high right here. It broke the structure. Then, if you notice, we also have another high at this nearest high. It broke this high. It also has its own internal break of structure. Then this is another high right here. It also broke this high. So this other block now has about 3 break of structure. So first, it was what I broke above this previous high. Then it broke this other high. Then it had this other high and it broke it. If you notice, there's even a third other block at this point. Take a look at this. There's even a third other block at this point. Can you see the third other block? Somewhere there. Now, let's start calculating and let's start doing this. Which of these other blocks is valid? First, this one now does not have any pullback. No pullback. This pullback now is too far off. If you start calling this pullback, you are wrong because it's not even close to the other block. If it's close, that's when it's correct. If it's too far, it's not a pullback. Right? Now, this one is clearly, since we don't have any inducement for this is already out. So I just take I will not long from there. This is already out. So I'm just going to indicate it as my liquidity level. Then I'm going to consider this other one. This other one now had its break of structure, which is first, we have a small break right here, internal break at this level, right there. Then I have this other next high, and the price broke it. Remember, it should break with a body. If it break with a tiny wick rejection, if it was this only break, if it was this only candle that broke it, I won't take the trade. But if you notice, this other candle went up. Can you see this next candle? That was why I'm even considering it as a break. If it was only this candle that formed, then the next candle started forming right here, started going down. It's not a clear break. It's not a valid break. I believe you guys got that. Now, I have my break of structure. I have my inducement level. So this other block is of high potential. It's valid. Then this other one, it has its break of structure. You already saw that. Then it's also valid because if this other one does not have an inducement, it's going to use this other one as an inducement for it to be valid. But since this one has an inducement, so I'm going to likely take a trade from here. So now you see that this other block is valid. I believe you now see what is going to make the other block valid, or why the other block is going to be valid. Right? So let's take a trade from this other block. Did you see what happened? Did you see what happened? Because it has its liquidity. That's all the market needs. If it's able to get the liquidity it needs to enter, it's going to work. It's going to play out.
So, sir, do we call that weak rejection that is green there? Yes, yeah, where we are there. That weak rejection down, can we call that liquidity as well? Yes, that one that comes down to where you mark as break of structure. Can we call that, yes, where your cursor is now? Do we call that one a liquidity too?
Very, very correct. It's not going to act like a double bottom liquidity for this other block right here. You get it?
Okay.
Now, remember, the price might not come back here because it's already buying off. So you start looking out for other blocks again. As it's buying off, start looking out for other block. Doesn't necessarily mean you have to wait till the price gets here. Right? So now, let's look out for other blocks. If you notice the price just rally up, it's not even retrace again. Right? It's not retrace to grab others again. It just started buying. So I'm waiting for a retracement to where? I have a red candle right here. But this red candle now, I'm not seeing any clear break of structure. Right? Though I have an inducement, I already have this pullback. This pullback right here is going to act like an inducement to this other block, but I don't have a break of structure. I'm not going to take the trade. I believe you got that. I'm not going to take the trade because it does not have the inducement. Now take a look at this. The price just broke it. It came down, tap on it, and just broke it. Did you see that? Because I don't have my break of structure. Though I have an inducement right here, but no break of structure. Remember, those are the two things that are going to make it valid. Now take a look at what the price is currently now doing. The price had this low. As the price is moving up, its went down, then pulled up. It had this low, then it broke the low. If it breaks the low now, you already know what's going to happen. A change of character has happened. Meaning now that there's a chance that the price is going to likely sell off because the buy was huge. The price is going to likely sell off to the nearest order block. Now this is a long wick rejection. Remember what I told you guys. If this long wick rejection is active right there now, it's going to act like an order block to the price. But what's going to make this order block valid? The liquidity. It already had its break of structure right here. But if it doesn't have the liquidity, now remember we marked it out as a liquidity to this very one. But if it itself has a liquidity, then we can trade from it. If itself have liquidity, we can trade from it. But if it does not have liquidity, simple, you allow it to be the liquidity to this one. Right? So I'm going to likely buy from this, or this way I'm expecting the price to come to. Since it's not changing character, I'm expecting to come there. You're not always going to be correct. You're not always going to be right. So let's see how this is going to be. So I'm going to likely start selling off from any nearest order block. So I'm seeing this green candle right here as my order block. So I'm seeing this area as my order block. And you already see this. It's so obvious that this is an incomplete pullback, which is going to act like a liquidity for me. So I'm going to likely sell from here. at least 1:2, lowest, but the best is 1:3. So I'm going to look for any nearest low to be my take profit. So this is where your risk to reward ratio is. This is where your risk to reward ratio is. This trade now is a 1:. Take a look at where your risk to reward ratio is. This trade now is a 1:2.85 risk to reward ratio. 1:2.85. Can you see that? This is close to 1:3. This is close to 1:3 RR, but this is not 1:3 RR. If I want to make it 1:3 RR, sorry, 1:3 RR, I'll just drag it to 3. Once it's at this 3 now, it means my risk to reward ratio now is 1:3. Can you see this 3? That's simply your risk to reward ratio. Once it's at 3, meaning you are risking 1:3. Did you get it? So it's a big problem for traders to know their risk to reward ratio, but this is how you know it, right? Now, likely I'm going to take this trade, but I don't trust it. Let's see. Okay, the trade ran in profits, ran in some crazy profits because it's an order block. Because obviously you already saw that it broke structure. It broke this structural low, right? And now it came down to about 1:1.4. Almost half of your profits. Now it's rapidly pushed up now and hit stop loss. Right? Let's say you were actually able to take the trade, but you didn't take partial profit as half of it. You decide to hold the trade till full take profit, then you hit stop loss on this very trade. Right? You keep trying, you keep looking out for opportunity. There are multiple week rejection at this point. There's this first week, then this 2 week right here. So this area now is going to act like an order block for me. But I've not have my liquidity yet. I already have my break of structure already. This side, the price broke it. I believe the strategy is getting clear and easy. Remember, I've not started using breakout block. I've not started showing you and marking out breakout blocks. I'm going to start it now. Right, we're going to start this now. Now, I have my order block. Then I'm going to likely buy from there. So the price is currently selling off. So the price currently started buying at this point again. So I have an order block right here. This red candle right there. Then you already saw that the break of structure is active right there. This is going to be the last tutorial on this very strategy. Make sure you get everything and master it. Right? I've taught this strategy so many times. So let's see how the price is gonna react to that point. You can see what happened. If you enter the trade now, if you enter any trade from the order block, your target is always the nearest high or the nearest order block. So I can see my stop loss just slightly below it. At least 1:2 lowest. This is about up to 1:3. And you can see immediately trigger now, it hits full take profit. Right? You already saw your liquidity. I believe I should not be explaining this again and again. You already have this pullback after the break of structure. If you've paid attention, I always say the first pullback after the break of structure is an inducement or a liquidity for the price. Right? Now, if taking this very trade, you don't take trade again from order block. Only if it broke structure again, right? And it has its liquidity again. You can skip taking trade from just a single support level multiple times when it breaks structure and broke every high. If you notice this, there's another block right here, this green candle. Can you see the green candle right there as the order block? Can you see the price respected it? The other block has its break of structure, which is breaking below this low. Then if you go down to a lower time frame, like I told you, you are going to always see that there's a pullback right here. Then immediately the price started selling off because the price has changed character. Immediately the price broke below this low. Immediately it broke below this low right here. This is the lowest swing low, the lowest point before it went up. Once it break that low, there is a change of character automatically. So the price is going to likely start selling off. So simple, that's how it is. If you let's take the trade. Let's say you took this trade from this point. Let's say you remember we marked out this level as our order block. Let's say you took the buy from this order block. Now you hit stop loss. Let's say you took the buy, you buy from the top of the order block, stop loss just below it. You should know how much you are risking on every single trade. Under risk management, I'm going to teach you this in details. For every single trade, even if the trade is going to make you lose 100 pips, even if the trade is giving you 100 pips stop loss, you should have a specific amount you are going to lose. If it means you have to reduce the lot size, you reduce it. If it means you have to open only one position, you open it. You should have a specific amount you are risking on a single trade. Even if it's just 20 pips or just 10 pips, you should have a specific amount that you're going to lose at that stop loss level. The number of pips is not important. Just know how many lot size you are using and how much you are risking. Some people are going to tell you my maximum stop loss is 20 pips. Okay, your maximum stop loss is 20 pips. Okay, you're just trying to tell me so I will know. But is it important to me? If let's say I'm using one lot size. If I'm using one lot size now on the same trade, which your stop loss is 20 pips, how much will I lose at 20 pips? Let me see if you guys actually got it. How much will I lose at 20 pips? If the trade is at 20 pips stop loss and I'm using one lot size, how much will I lose if the trade hits stop loss? Drop it in the chat box if you know it. $20. Okay? That was your answer. I'm saying one lot size. So any other answer? Under position sizing, risk management, I'm going to teach this properly. Yeah, you are correct now. $200. If I feel no, if I'm going to take this very trade, I don't want to lose up to $200. I want to lose nothing more than $50. I'll just reduce the lot size. Simple. Does not mean I have to start dragging my SL higher. It does not mean I have to start dragging my SL higher in order for me to start risking the $50. All I have to do is also reduce the lot size. So if somebody is telling you my stop loss is 20 pips, it's just going to tell you that, okay, know the lot size you are going to use on the trade. Know the lot size you are going to use on that very trade. Simple. Now, let's say you took this very trade and you took this very buy and you hit stop loss. Instantly, you hit stop loss, right? Now, what did I say? Once the order block failed now, it's now a breaker block. Why did this order block fail? Why did this order block fail? Clearly because the price has now changed character. The price is now bearish. If the price is now bearish, then you want to start shorting. But if you long, that's why it failed. Right? That's the only reason it failed. Then most of the time is because of some news and some economic factor. But the other block has failed. It's not a breaker block. So you're going to likely sell from that very breaker block level. Stop loss above it. Target the nearest low, any nearest low. And at least 1:2. If the nearest low is not up to 1:2, don't take the trade. If you're a good trader, 1:3. I'm already having a 1:3 risk to reward ratio trade. So I'm taking the sell. Okay, the trade did not work out. Okay, it's supposed to play out. Okay, I noticed what the price did. The price came to tap at our order block. Okay, notice something. Notice something. Right, notice what the price did. We marked out this order block earlier. The price came to tap at this very order block. That's why I did not respect this breaker block. Now, remember what I showed you earlier when I was doing this. Right? When I was doing this, when I showed you guys this, I said if the price is going down, there's a breaker block right here. The price is not going to respect it if it taps on the order block at this bottom. If it's going up, it's not going to respect that breaker block. Right? In a scenario that's gonna make it respect the breaker block is when the order block is not this close. If the order block is already closed, only when the price has not got to the order block. Let's say the price got to somewhere here, the price got to somewhere here, then it's pulled up. That's when it's gonna respect the breaker block, then sell off to tap on the order block. I believe you guys got that now. So that's why I did not respect it. I didn't draw it forward. I didn't draw it forward. So that's why I didn't spot that there is another block right here. Did you guys get it now? So that's how simple this strategy is. It's the strategy I keep using every single day, right? Now today, let's do today. Today now on Euro USD, I caught a buy, I caught a sell, right? On Euro USD, I caught a buy, and same, I caught a sell. Let me show you what I did, or let me show you a clear example of what I did. What I did was simple. On this trade, on this Euro USD, what I simply did was extremely simple. Let me show you to you what I did this morning. Right? Now, I scalp. I took a scalp. I didn't trade on a higher time frame. I scalped the market. Right? What I did was I go down to a 10 minutes time frame. I know on your trading view, 10 minutes time frame will not be active. Right? 10 minutes time frame on your trading view will not be activated. So you have to I didn't catch this sell. Oh my goodness. I wasn't active, would have caught this sell. Now, 10 minutes time frame will not be on your trading view, so you can get down to a 5 minutes time frame, or you can stay roughly on a 15 minutes time frame. It's still very much okay. Right now, the trade I took now on this Euro USD, the trade I took, I've been on Euro USD since yesterday. So the trade I took now was clearly on a 5 minutes time frame. All of the trade I took, right, was on a 5 minute time frame for you. But to me, I use my 10 minutes time frame to get all of this. Right? I got everything and all the trade I took on Euro on 10 minutes time frame. But like I said, 10 minutes is not active on your own trading view. It will not work. So 5 minutes time frame is good. I don't know if you get what I just explained. 10 minutes time frame will not work on your trading view. So 5 minutes time frame is good. On the 5 minutes time frame, I saw that the market session to scalp with this strategy, you start from a 1 hour. 1 hour now you want to know the direction of the market. Euro is bearish. I don't have to start saying it again and again. Euro USD is bearish. Right? So I want to start shorting Euro USD. I want to short Euro USD since it's bearish. I believe you guys are following. Now, if I want to short, I don't want to short from any random level. If you start jumping on a short, you just woke up in the morning and you saw, oh, Euro USD is selling, and you want to start selling from this point. The price can just retrace and then hit your stop loss. It's bad. If you miss trade, just stay calm. I'm going to teach you under psychology. We're going to get all of this. Stay calm. Just feel bad that you missed the trade. Don't jump on it. Now, if you notice, it retraced. It had this order block. The last green candle before it started selling off. Then the same order block now. I'm on the 1 hour time frame. Sorry. So let's just go to a lower time frame. 5 minutes time frame. Scalping. What is on scalping mainly? 5 minutes, 15 minutes. I believe you guys got that now. 5 minutes, 15 minutes. I don't know why the network is disturbing. Let's just wait for the network to load up. I don't know why it's disturbing. Okay, it's up. It's up. Now, on a 5 minutes time frame now, I marked out this level as my order block on a 1 hour, right? Like I told you guys, 1 hour now, I don't want to miss out on the trade because it's so obvious on the 1 hour. But you can get a sniper entry on a 15 minutes time frame order block, right? You can get a sniper entry on a 15 minutes time frame order block. So now we have our order block right there. So I'm waiting to get my liquidity. I already have my break of structure. Why is this network disturbing? I don't know why MTN is disturbing me. All right, so I have this low and the price broke this low. So I clearly have a break of structure to the downside right there. All right. I clearly have a break of structure to the downside right there. So I'm going to likely short from here. Under liquidity, I'm going to teach you this form of liquidity. We had a trend line liquidity on this very price. We had a trend line liquidity on this very price. So the price is going to likely sweep this trend line liquidity. Under liquidity, I'm going to teach you all the liquidity concepts you need to know, right? Like I told you guys, if you're actually able to complete everything I'm going to teach you, you don't need any other mentor, right? You don't need any other mentor to be good in trading, to be profitable. Just follow everything I'm going to teach you. Write down, take notes, follow them, journal. Then all you have to do is just to start looking for money to fund your account, right? If you start trading with $10, $20, you won't make any money. You won't buy Labo. So you need larger account size, right? Once you are now good, you can grow, you can start flipping accounts. If you are now good, right? So I'm going to tell you how to do all of this. Simple and easy. Now, I now have a trend line liquidity right there. So I'm going to likely wait for the price to sweep. Do you have any template to general trade? I simply use, I don't have any website or any sort of that. I simply use my phone notepad. Sorry, my Google Sheet. Sorry, I say my phone notepad. I don't know why the network is disturbing. I use Google Sheets to journal. I don't know why the network is disturbing the meeting. I don't know. Why is this network disturbing? I don't know why the network is waving. It's waving the call. I don't know why the network is it's just something else this morning. Now, your question was, how did I journal my trade? I journaled it on my Google Sheet, right? It's an application. I'm going to send it into a group so you guys can start using it. I just write it down, right? In my students, my previous students, I sent it to them. So let me also send it into a group, how I journal my trade. So you guys can start doing the same, right? So now, okay, all right. So I just mark out this other block and I have a trend line liquidity. This is a form of liquidity we call trend line liquidity. I don't know why the network is just something else this morning. It keeps failing. You notice it's not even showing up again. I don't know, the network is just something else this morning. I don't know why the network is just disturbing, but let's manage this. Let's see if we can finish the class. All right, so like I said, I have a trend line liquidity right there. So I have a trend line liquidity right here. So this is going to act like a liquidity for this order block, right? So I'm going to likely sell from the order block region. That's simply what I did, right? I caught this sell on Euro. This was yesterday. I got another sell on Euro today, and I sent out the signal, right? If you notice what Euro did, it really went up to this sell button and instantly smashed or sold down and hit your full take profit, right? Let me show you. The order block I marked out was a 1 hour time frame order block. The last green candle before the price started selling. You can see what the price actually hit entry and then hit take profit. About 1 is to 3.3. 1 is to 3.3 risk to reward ratio. Same thing. What I did this morning now was this. Market is still bearish. All I have to do is to keep shorting. I spotted an order block like this. There's this candle right here. This is an order block. If you notice this clearly what I'm about to say. If you notice there's an order block right here, but if you notice this price action closely, you're going to see that there is supposed to be an order block at this region, but this order block failed. Automatically, this is now a breaker block for me. Did you not see what I did now? This is not like a breaker block. You already know that it failed. There's a price supposed to get there and buy up, but it failed, and now it's not a breaker block. So I'm going to likely sell from there. Okay, this is what I'm saying. right? Also, we also have another field breaker order block right here. There's also another order block at this point. 5 minutes time frame is a little bit shrink, right? Let me go to 15 minutes. Now in 15 minutes time frame, you're going to see there is another order block at this point. There's another order block right here at this point, which also failed. This first one failed, this second one failed. You can see the price respected this one and started selling off again. Already a breaker block, but I didn't trade this breaker block. I didn't cut it. Right, the price tap on this breaker block and sold off again. You enter from here. I'm going to show you the trade I took. I'm just going to show you more examples so you can easily master this very strategy. Stop loss above it, take profits 1:2 at least. But if you have 1:3, good. These are 1:3 risk to reward ratio trade. Full TP smash. Then immediately hits 1:3, started buying up again. Right? Now it's buying up now to any nearest order block. I'm seeing now that the price had this pullback. The price had this pullback to this breaker block and sold off. There's an order block right here. But clearly, I'm not seeing any clear break of structure. I can now go down to a lower time frame to actually show you, since it's not getting clear. There's no clear break of structure. This was a low. There was a low at this point. Now the price broke it. But the break was not so clear. The break was just a weak, tiny weak rejection. Let me show it to you. Let me show you the break. There is a low right here. Now there was a tiny weak rejection. Notice a break. Is this even a break? There's no even break right here. So clearly there's no break of structure right here. If you start marking out this green candle now and start saying this is an order block to you, you are wrong. Even if you have your liquidity, you have your this nearest side, now this incomplete pullback is already a liquidity for you. But you are still wrong because this is no break of structure. You don't have your two confirmations, break and liquidity. You don't have them. And remember, the three things you should follow: market structure, then to trade, to take the trade, breaks, and liquidity. Now, I don't have my break, but I have my liquidity. So the price is going to likely respect it. But me, if I don't have those confirmation, I don't take the sell. I'm going to show you the sell I caught. I don't know why the network is just disturbing this call. Okay? I don't know why network is disturbing this call. What's this? I don't know. The network is not allowing the buy replay to work. MTN is just terrible this morning. Let me try disconnecting it and connecting it again. But I believe you guys got the strategy. I'm just gonna show you. I took a trade on this same euro. I was about taking a sell on GBP USD. Sorry, GBP JPY. But I didn't. The price did not come to my sell level. But I was gonna take a sell on GBP JPY, but the price did not come to my sell level. Now, how many of you caught that very? I don't know. The network is just terrible. The network is just terrible. I'm so sorry for the break. Now, I was saying, I was waiting for a sell at a region on GBP JPY, but the GBP JPY did not come to the point, so I can sell. So it did not come to the region, so I can sell. So how many of you caught? How many of you also saw the sell? Let me see if you guys have already started practicing the strategy effectively. How many of you also saw the sell on GBP JPY today? I saw it. Thank you very much. That's good. That's a wonderful thought. Or that's a wonderful thing. Right? He said he saw it. Meaning you are not seeing what I'm saying on the chart. You can easily see it's simple. The strategy is simple. Right? I guess another person saw it. I did not check. Okay. GBP JPY is one of my favorites pair, right? GBP, JPY. So you should also add this up to your favorite pair. So you can also start trading it. GBP, JPY, Euro USD, GBP USD. Those are my favorite pair. Then gold. I do trade gold. Gold is when I need money. If I need money, I'll just go to gold and then I'll make money. Right? So let me show you the sell I took on cash cow. Yeah, gold is the cash cow. Yeah. Now let me show you the sell I took on Euro USD. I entered the sell yesterday, not today. I entered the sell yesterday. So I took the sell from this very region. Like I said, I took the sell on a 5 minutes time frame. So this was the order block I marked out. This last green candle, I marked it out as the order block. I entered the sell since yesterday. So I can just show you, I really entered yesterday, this green candle. So I will show you I really entered yesterday. Take a look at the time. Take a look at the time when the price got there. It was a limit order, a sell limit order yesterday. Now by 3 a.m. in the morning, I was already on the sell. By 3 a.m. in the morning, I was already on the sell. Then it was by 7 a.m. in the morning that the price started moving, and that was when I sent out the signal. Right? Those who entered the trade, who took the signal, I believe you all made money. Because the price was literally at this point. The price was literally at somewhere here when I sent out the signal. Then it sold off rapidly. Then I said, take profit. Now take a look at what I did. Like I told you, I caught a buy and a sell on Euro USD today. This was a sell. I sold off from this order block point because the order block had a break of structure. You can see the break, this low, this is a low, and the price broke the low. This is not a tiny weak reaction. This is a full candle. If it was a tiny weak reaction now, it's not valid. Then I have my pullbacks right here. I have my pullback right here. It's going to ask my liquidity for the price. Take a look at what the price did. I took the trades about at least 1:2. My trade is always at least 1:2. 1:2. My target is always the nearest order block. That already 1:2. Now, you guys see the trade smash full take profit. I know how many of you caught this very trade. If you caught this very trade on Euro, meaning you are doing well for yourself. We are going to go to crypto now, and I'm going to do some examples. Just one crypto. I'm already getting exhausted, right? Now, if you call this trade on Euro, you are getting good. You are getting better. Now, if you notice, I took a buy. I said I took a buy. And even when I sent out that signal, I said, once the price is at a yellow, there was a black line I marked out. I said, once the price is at that black line, take profit. Let me show you the message I sent out. I said, once the price is at that black line, take partial. My Telegram, that's where I always send out the message. For those who are not there, try and join. The Telegram link is in the description. Sorry, I've sent it in the description. It's below the video. Now take a look at what I said. I sent the signal late, so I didn't send it out earlier. I said, first TP at the black line. I marked out this very black line. And take a look at the black line. Let me show you. Okay, look at the black line. Do you see the line I marked out? This very line. I said, once the price is there, take profit. First, take profit at the black line. I was expecting a sell continuation. I was not expecting the huge buy. So let's see what happened at that very black line. Take a look at what happened. This was the black line, and you can see how clear it is. This was a black line. Why did I mark out this black line? First, it had its break of structure, BOS. Beautiful. Then it had a pullback after the break. There was a pullback after that break. So this pullback now has acted as my inducement / liquidity. So the price is going to likely buy from here. This black line I marked out, as you can see, is the last red candle before the price started buying. So it's an order block. So I didn't just mark out any random level. Stop loss just below it. But I didn't take I took the buy, but I didn't catch it earlier. I started buying when the price was already retracing because I had to close my short before buying. Right? Now, your target 1:2 at least. Then if you are good, you want to hold 1:3. You can see what the price did. It had everything in place. I don't know why the network is just waving the call. So it had everything in place. Incomplete pullback after the break of structure. Then my order block, I buy from there. You can see what the price did. Immediately tap on the order block, started buying. I didn't expect this huge buy on Euro today. I didn't expect the huge buy. It was so crazy. Right? Over 30, 40 pips. Wow. I didn't expect a huge buy. So this was where it started buying from. So I caused the sell, I caused the buy somewhere here at this next order block. I marked out this next level, this next region right here as the order block, this next region, and that's where I took profit. Right? About 1 is to how many reached the revolution. So simple, these are the strategies. You can easily see we caught 2 trades on Euro USD today. We caught this sell from this order block point. It sold to this next order block. This order block has everything needed. And immediately I saw that it had everything, I said, take partial profits right there. It had its pullback, liquidity. It had its order block. It broke structure. Then market structure is bearish. I know. But if you notice, the market structure recently is now forming some bullish pattern. It has this broke above this high. A chain of character is already initiating right there. Chain of character is already going to happen. Then it had this high. The next high it formed was a lower high, a higher high, sorry. It's supposed to break it, but did not break it. So it's already forming a higher high. So I clearly saw that the pattern is already changing gradually. So you can just see what I did. Simple. Now let's go over to any random crypto pair. I caught a trade on this injective. This trade was a personal trade. I didn't send out a signal. Or should I start sending out my personal trade signal? If you want me to start sending out my personal trade signal, just drop it in the chat box so I'll know. Simple. What I did was simple, right? Market structure is bullish for crypto for some days now. Market structure has been bullish. At this point now, we have an order block right here. But I did take the order block. I didn't take the trade from this very order block because I didn't saw it. I didn't saw it earlier. This order block now had a break above this high. Simple. Then the next thing, it had this pullback. There's this pullback right here, which is gonna act like an inducement. Simple. Then I take the buy. I didn't take the buy, like I said. I was supposed to take I wish I know I spotted this, I would have taken the buy, but I didn't take it. Right? Then it pulled up. The next thing, I had this order block right here. This red candle right here as my order block. Right? Then I had my break of structure right here. A break above this high. Now I have my break of structure. Many of you are gonna start saying, no. This high should be the break. This high breaking above this high should be the break of structure. Yes, you are correct. But if I have a break like that and I have an inducement or a liquidity level, I always take the trade. Even if the break is not the real swing break. This is just an internal break. This is not a highest point that the price broke. So it's just an internal break. So I'm just going to mark it out as an internal break of structure, but I can take a trade from there when I have this. And immediately you notice that I have this inducement. Let me show you there. I had this inducement right here. This low. You guys, this is the equal lows, the incomplete pullback as an inducement. So I took the buy. So I'm currently on the buy on this. Let me show it to you. I'm currently on this very buy, and now it's moving. You can start sending your personal signal. All right, now, personally, you know why I don't send out my personal trade signal? It's because I already know how I manage my risk with my signal. Right, many of you now, you start taking trade with my signal now. You don't know how I manage my risk. You don't know how to manage your risk. So that's why I don't send out the signal. Take a look at this trade. On the injective, I'm currently up about 95%. Right? So now take a look at, for every single trade I take in the market, I always take screenshots. Right? I always take screenshots, and I would advise every single one of you do similar thing. Take a look at this trade right here. And you can see how beautiful it is. Everything was complete. My break of structure is right there. I mark out the order block. Then I have my liquidity right here, this low. Then I took the buy, but this was a clear missed entry. It was so painful, the price did not tap on it. Take out the next trade. This was the euro trade we took. You can see I'm on a 10-minute time frame, and that was what I said. I said I do this on a 10 minutes. But since many of you will not be able to access 10 minutes time frame, I took the sell. Then at the black line, I said take partial profit. Then this was a calendar dollar trade I took. I guess this trade did not play out. This trade hit stop loss, but I don't know why. Because of the bearish move on, you can see the Euro USD trade. Like I said, I took the trade I set a limit order, then it triggered by 3 a.m. You can see the trade right here. I screenshotted it by 3 a.m. And then you can see the play out. See the play out right here. See the setup right here. See the play out. So it was a personal trade. If you expect me and look at the injective trade I took, like I said, I do take screenshot of every trade I'm taking. This is the injective trade I showed you earlier. So it's important you do all of this. If I'm going to advise you, do everything I'm doing, right? Do everything I'm doing and you're going to be good. Just do everything I'm doing. You're going to be good. Don't look for any other mentor. If you feel you want to keep learning from me, you want to explore more, then you keep joining my program. You keep joining the class because as you are learning more, you'll be becoming good. Some people they might not be able to get everything for 1 month, 2 months, right? Once the next registration begins, you join again. You learn more. You learn what you've not learned before because my previous mentorship program was not as effective as this very one. As time goes on, I'm going to start implementing some new things, bringing in some new things for you guys to understand. So that's simply how it is. It's as simple as that. Is the strategy clear? Is the strategy clear? Let's do a live analysis. Yes.
Yeah, let's do live analysis.
All right. So someone said I should send out my personal signal. Like I said, why I don't send out my personal signal is because me personally, I know how I manage my risk. I can be risking 3% of my account now in a single trade, and I send out the signal, and you start risking 10% of your account. Then if I lose 3 trades now, I will only lose 10% of my account. But there, you've already lost 30% of your account. Did you see why I don't send out signal most of the time? That's the only reason I don't send out the signals. No other reason. Because it's risky. Trading is risky. Me, I don't want to start putting you at risk. So that's why most of the time I send out one signal a day, and all of that. So let's check out gold. Let's scalp because I don't want to swing trade. If I swing trade, then it's gonna take time. Okay. Gold market is currently bullish. Okay, I have my order block right here. I have another block right here. So I'm gonna likely sell from this other block. I had my low and the price broke this low. So, but this is a sweep. This is not a real break. This is just a tiny weak rejection. So this break is not so clear. But I have my liquidity. I have my liquidity right here. So I'm gonna likely sell from here, but with a very little risk. Because it's not so the break. I wish the break was a huge candle. So it was a full candle. I would have taken the trade with a good risk, like 10% of my account. But with this very little week now, I'm gonna just risk, let's say, 3 to 4% of my account on this very trade. My target is always 1:2 or 1:3, if possible. Then I'm taking the sell. Did you see what I did? Simple and easy, very simple. Market structure is bearish. That's why you already know that I should not be going over and over that again. Market structure is bearish. Gold has been bearish, right? So I want to short. I can long. Remember, I can long, but shorting is more guaranteed. So I'm taking this sell on gold. My favorite currency now, GBP. So I was expecting a buy on GBP from so many regions, right? I was expecting a buy from this first region, but the price violated it, right? I was expecting a buy from this second region. The price violated it the second time. So literally, I'm just gonna relax on GBP JPY today. So obviously there's a breaker block at this point, which if the price comes here, I'm gonna likely sell. Also, there's another breaker block right here. When the price comes here, I'm gonna likely sell. So do you see how I do my analysis? Under position sizing, under risk management, you're gonna get everything. Right? Not all trade I take. There are some trade, if I set a limit order and I see how the price is coming there or reacting to that point, I'm gonna close out. If I see how the price is coming, if you notice now, the price was just rapidly pushing down, rapidly, and I didn't check if there's any fundamental news. I didn't check for any fundamental news on USD or on JPY. So I was literally just thinking maybe there was news. So I just closed out. And you can see closing out now helped me or helped me from losing money or prevents me from losing money on this very trade. Can you see it hits stop loss? Everything was complete right here on this very trade. Break of structure was right there. Then pullback was right there, inducement. Then I mark out order block. I want to buy from here. But the way the price is sending out this red candle, just selling, 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 I just feel it's just gonna break it. It's just gonna destroy my stop loss. So that's why I set a limit order before, but when the price was coming there with this force, I just closed out. Because it's gonna likely just destroy stop loss because I didn't check the news. If I had checked the news, I would have know if there's no news, I would have had the confidence to hold the trade. So let's check if there's any news for the week or for today. Let's see if we're gonna trade the news. I'm gonna teach you how to trade the news. If you check our schedule, it's right there. So I'm gonna teach it to you guys. Monday, Tuesday. Today is what? Today is Friday. Oh my goodness. We have news by 2:30. Core retail CPI, core retail trades. Okay, we have news by 2:30. So let me show you how you can trade this news. Once I'm teaching you how to trade the news, you're gonna understand it properly. I guess today is 15. It's already showing the news. Let me refresh the page. Today is 15 Friday, but the news is already showing already. Notice what I'm saying. Notice what I'm saying. Notice what I'm saying. Okay, the previous, okay, let's just use this. Let's use this. Let's use this. Now, if this news comes out, let me explain this briefly so you can easily end the live. I'm getting tired. If this, so you can know how to trade it by 2:30, if this news comes out, the core retail sale is this. The sale of goods, those goods, any goods at all, your clothes, these are the core retail sale, right? That's what it means, the retail sales. Now, if it comes out to be lower, the previous one was 0.4%. That's the MM. Then this other one was 0.5%. If it comes out to be lower, right? If it comes out to be lower, it means people now pay low dollar, low money to buy these goods. Like let's put this shirt. People now pay low dollar, meaning that the dollar is now good. The price is gonna go up. So since their forecast now is lower, so the dollar is gonna likely go up, and gold, BTC, all other USD pair are gonna likely dump by 2:30, right? Then if it comes out to be higher than this previous, not the forecast. Previous, if it's higher than this 0.5, many people now pay more dollar for these goods. So the dollar is the strength of the dollar is gonna get weak. So the dollar is gonna dump, and all GBP, USD, Euro USD, gold, BTC, all of them are gonna go up. So that's what I'm expecting with this news. So if I'm active, I'm gonna send out the signal.
So sorry, please come again in the explanation of the previous and the forecast.
Okay, this previous, this previous is 0.4. If the news comes out, if it comes out now, it's gonna show right here. If it comes out to be lower than this previous, the dollar is strong, meaning the dollar is now strong, and the price of the dollar, that means the dollar index. I'm gonna show you how to get the dollar index once I'm showing you how to trade the fundamentals. It means the dollar index is now strong and it's gonna likely go up. And all other currency, GBP, gold, they are gonna dump. That means if it's lower, but if it's higher, all that currency are gonna pump, and dollar is gonna dump because people now pay more dollar for these goods. So I guess it's clear that way. The same thing with this other MM.
That's to say, for example, if the actual is 0.4, that means we have to sell gold.
Okay.
For example, like XA, like gold. I'm talking about gold now.
Yeah, that's what it's mean. For this first one. But if it comes out to be the same, if it comes out to be the previous is the same as the actual, then there's no likely gonna be any massive reaction.
But sir, from this FS table, there is no actual here for USD core retail sales.
It's
So,
like
but what we are having here, we are having the forecast here. and we're also having the
previous.
previous. So does it mean it will still sell even when we don't have the actual, right?
Once by 2:30 now, the actual will come out.
Okay, so in the forecast from, if I'm getting it clear, that means since the forecast is 0.3% lesser than the previous, which is 0.5, that means USD is having a stronger point
Momentum.
now.
That's what they are predicting. But if it comes out to really be lower than this previous, the previous is the main thing. This one is just prediction. If it comes out to be lower than these ones, that means the dollar is strong. That's when the actual
That
comes
means
out at that very time. Did you get it?
that
So
means
the
that means if it comes out to be the forecast like 0.3,
Yeah, meaning the
that
dollar is
means we
strong.
still have to. That means
You have
the
to
dollar is strong.
sell USD pay.
so does it mean we have
Okay.
to wait for the actual to bust out before we proceed?
Yeah, if you want to wait. Some people they just since the forecast is here, they do trade this forecast. Do you understand that now? They can just since
Okay,
the forecast is already showing that the dollar is gonna be strong, they're gonna start selling off other currency. They're gonna start looking for areas that are resistance to sell. Once I teach you how to trade the niche, you're gonna understand it.
because I know when the news comes up, it doesn't even take a second before the candle goes anywhere it wants to go to.
Yeah, yeah, yeah. That's what we trade from.
Okay,
Even
thank
before
you.
the news
Thank
comes
you.
out, there's always reaction. You can know where the like this one, we already know where the news is gonna go. All USD pair they are gonna done since the forecast is already out. But the actual is the main thing. The forecast is already telling us, right? Since we already know where it's gonna go if it comes out with the forecast, but we are not sure. That's the only thing. You can start selling now, or you can start selling by 2 o'clock because you already know where it's gonna go, but you are not really sure. It can come out to be higher. Did you get it?
Yes, sir. I'm with you, sir.
All right.
So, sir, that means in such scenario, our analysis, our fundamental analysis will not be playing a part again, right?
In some worst case scenario, yeah, very high impact news. Your analysis will not play out.
This strategy you just showed to us, what's the name? Is it market structure?
Market structure. Your order block and
Okay.
breaker block and inducements and liquidity.
Okay.
All right. So I guess it's clear.
Yeah.
Okay, any other question? So can I
Uh,
end it?
yeah. I think on using your Facebook.
Yeah.
Sorry, I mean using your trading view, not Facebook, using your trading view on your phone, and it plays a lot like a different role when you're using your laptop.
Yeah. Yeah. Using your
Because
laptop.
I think laptop is more clear than using the phone. Because
Yeah.
sometimes when I use my phone to try to check the market, I hardly see this the POS and the OB.
You also say it is because you have not mastered it. I sometimes use my phone, but laptop is more clearer. It's better.
Okay.
So another question. All right. Once I send you the recorded lesson now, you watch it. Right. If you have any question, just drop it in the group or you drop it. You ask me the question directly. Right. Practice is what is gonna make you good. Right. Practice it. My
All
mentor did not
right.
teach me this way. Right. He didn't sit down to us. I only watch video lesson. Right. I learned it online. I didn't go to any physical class. So I only watch video lesson. He didn't teach me this way. So I'm teaching you this way now so you won't go through all the stress I went through to practice it. So just master everything and then you practice it first.
Okay. All right.
Before you trade by yourself, just wait for me to teach you about about the, I mean, if you know what I'm gonna say. Before you take any trade
Risk
yourself,
management.
very correct, simple. Wait, let me teach you how I manage my risk.
Okay.
Just keep practicing the strategy on the demo account, right? Practice it
Yeah.
and let's see if it's working. Then, when I teach you risk management, you fund your account and start trading.
All right.
All right, see you in the next class.
All right. Bye.
All right.